morning, everyone, and welcome to today's edition of Frontier Opening Bell. I am Bosin Amofaya, and it's a Friday, the 16th of April. Welcome my panelists today to the show. Luke Ofojebe, who is the head of equity research at Vetiva Capital Management. Ali Kansacho in Nairobi, the CEO and founder of Rich Frontiers Management, and Omotayo Odo, who is part of the research team at Greenwich Merchant Bank. We thank you, ladies and gentlemen, for coming through on the show this morning. So let's get the African market equity side on a very good note. Largely many African bourses finished yesterday in the green territory with the exception of Nigeria and a few others. Across the Pan-African space, the Kenyan market went up nearly 2%. Ivory Coast printed nearly 1%. South Africa was just a little bit smaller in terms of the All Share Index, and Egyptian having its final trading day for the week on Thursday. Friday is the start of the weekend in Egypt. 0.27%. The Kenyans are still reporting their earnings for 2020. Jubilee Holdings reported improved income of profit after tax, about 4.1 billion shillings for last year. The international finance corporations, Philips and cooperative banks, are partnering with some billions of shillings to help the small and medium enterprises. The Lamu port in Kenya will start operations in June. We hope this will help the country's economy. And Uganda's cabinet is looking at this mining and minerals bill to tackle illegal mining within the Ugandan community. And merge exchange on Seychelles Islands, Vodco Limited, one of the listed companies, is paying a dividend. Ali, let's hit the ground running with the Kenyan market story.
So let me first start off with Jubilee Holdings. It's the biggest listed insurance company here in Kenya, and actually has a presence in most of East Africa. And recall that earlier last year they partnered with Allianz in terms of a vehicle for the general insurance business, and I thought that was a very clever piece of business to bring in that expertise from a global insurer. So I think that's also going to be a positive development. They reported earnings per share was up about 2.0175%. That's in a pandemic year. So I think, that is a pretty good performance. Profit before income tax, 5 billion shillings, $50 million or thereabouts, just a little bit less. Total dividend, final dividend, 8 shillings, plus 1 interim, just under 4% total yield. Total assets, 146 billion shillings. Number one combined insurer in Uganda, and it's the number one regional medical insurer. This is a very big business, medical insurance for them. Look, I mean, these were resilient results. It is a very solid balance sheet Jubilee's got there. I don't think you're going to find anyone's going to argue with those results. A real pillar of the insurance industry, and I think with a very promising growth curve in front of them. Liberty, which is another insurance company, also reported results earlier this morning. So we're getting a slew of insurance companies reporting at the moment. We also had a minor company called Flame Tree Group, market capitalization is about $2 million, but interestingly reported earnings per share up 68%. This is a diversified manufacturer and distributor of plastic tanks, cosmetics, snacks, spices, and playground equipment. Quite an interesting, it's a little bit like Tiny Roland doing everything it seems. But to go to your other headlines, the Lamu port is beginning operations in June. The Lamu port was predicated on Lamu wresting oil and gas, East African oil and gas up there and distributing it from this Lamu port. Unfortunately, as you know, the Ugandan pipeline has gone to Tanga. So you've had the center of gravity for oil and gas go further south. And then also Lamu was seeking to rely on a route to the sea for Ethiopia. And I think one has got to question that thesis because of the love fest between Isaiah Afewerki and Prime Minister Abiy in Addis Ababa. And I think increasingly you're going to see more of Ethiopia's business traverse through Djibouti and through Eritrea. So, you know, it's an exciting headline, but there are serious questions around, you know, the thesis behind that port. IFC Phillips and Co-op, that's a serious chunk of change. That's $300 million they're looking to provide to the SME sector. SMEs have been under significant pressure here in Kenya, and then they've been hit with a turnover tax of 1%, which is irrespective of any profits you might make. Whatever your turnover is, you're going to get hit with this 1% tax, which I'm not convinced is necessarily a forward-thinking idea. And Uganda's cabinet okayed mining and minerals bill to curb illegal mining. Obviously, they're very happy with the signing of the agreement with the new president of Tanzania, Total, talking about oil coming on stream by 2025, looking for about 500,000 barrels per day going forward after 2025. So I think, you know, they're just trying to tidy everything up and excite investors to look at other areas, just not the oil extraction.
Interesting developments within the East African corridor. Thank you so much, Ali. Between Omotayo and Luke, I want you speaking to West Africa. I want Luke to speak more to the macroeconomic and corporate issues, while Omotayo will speak a bit more to the markets. But again, the whole Boas sugar and Dangote sugar face-off looks like it's beginning to pay off, because the sugar fats within the last 2 days, 3 days, these two big multi-billion, multi-trillion naira business empires have unveiled their sugar farms and facilities in Nasarawa State and in Kwara State. Looks like good news for Nigeria. We can get the best of these two industrial giants in Nigeria. CBN Governor Emefiele clarified the 60 billion naira money printing. The jury is still out there. He says it's a whole lot about supporting the government at every point in time. The founder of Econet, Strive, is a Zimbabwean, by the way, is planning $100 million data center in Nigeria. Ali will bite into Strive foreign direct investment into Nigeria a little bit later. But the UEMOA has a new president, Abdoulaye Diop. Congratulations. Burkina Faso is borrowing fast and furious within the UEMOA region. And the IMF new report is forecasting 3.4% growth for Africa in 2021, but that will depend on a whole lot of factors. Let me take the ladies go first. Omotayo Idowu, give me a sense of what you're hearing on the ground about this, the whole printing of money, and what is the industry, everyone on the street saying, why is this important story, by the way?
Thank you very much, Hussein. So with respect to the printing of money, as informed by Governor Edwin, by Obaseki rather, the Governor of Edo State, over the
both of them are Godwins, by the way. The first name is called Godwin. Yeah. Okay. And both are governors, by the way. So
okay, so the Governor of Edo State in particular made a statement about the government printing money to cover up for the FAC allocation. And the CBN has rebutted the claim, stating that naturally they're in the business of printing money, and printing money is lending money. And so they've stated, the governor of CBN Bank stated that they haven't printed any money, and that was also corroborated by the Minister of Finance. But then eventually it has led to the CBN making claims that monetary allowance that has been given to state and federal governments over the years, when there's been economic downturn, to support their budget allocations would be required of them. However, that's the current conclusion. So basically, we just are waiting to see what's going to happen in April when the next FAC allocation is going to come up, whether or not the budget is going to be deducted. There are going to be deductions from their FAC allocations. Thank you.
Great. Look, I'm sure you've seen the news over the last few days, 2-3 days, about the sugar refineries and the whole move by the central bank, and we go to Nasarawa, Dangote, and Boa also taking some journalists to it. Do you think we are most likely going to be the better for it at the end of the day?
Thank you very much, Bosun, for your question. So really what's going on in the sugar space is really in line with the government's drive to promote backward integration, and that will actually help to reduce FX burden on sugar importation into the country. It will also help to eliminate issues around sugar smuggling into the country, because it means that the country can be self-sufficient when it comes to sugar production, which has been the challenge over the past few years, really. So what we are seeing right now is, companies in that space trying to ramp up production, trying to set up new refineries in order to ensure that we have that local sufficiency, and we don't need to rely on countries that we import raw sugar from. And this will actually go a long way to support our FX markets, really. It might not support it substantially, but to a reasonable extent, it should help to reduce the burden on FX demand, given that sugar is actually one of the major items needed by a number of these manufacturers we have in the country, not just the food processing companies, also even the brewery space. They consume a large amount of sugar when it comes to brewing a number of beer products. So I think this will actually help to support the government's drive towards having this self-sufficiency status.
Okay, a quick one. Let me go back quickly to Omotayo on inflation. What's your take on yesterday's inflation, in particular the food index?
Yes, the food index posted about 23% in last for March. It wasn't unexpected. There are current situations that ought to be fixed. There's the insecurity issue that is lingering, there's the infrastructural issue as well. So seeing those figures was expected, and if care is not taken, we expect that it would even ramp up even more for the next month.
Okay, interesting. Let me ask Luke very quickly I want your thoughts on the data center that Strive Masawia is planning for Nigeria. Then I'm going to ask Ali to comment into that.
So I think that shouldn't really be surprising, really, in terms of channeling funds into that space, trying to set up a data center in Nigeria, because really, when you're talking about data, it's clearly the future, really. We are gradually transitioning to a world where data will become the new crude oil we are going to be mentioning going forward. So, and looking at how looking at the Nigerian market, it's still at the infancy stage when it comes to data management. So I think coming here to set up a data workshop, we actually have to support our data management systems in Nigeria. It will also help to support businesses who might need to rely so much on artificial intelligence in many years to come, where they can source data from and the like. So I think it's actually going to be a major boost for the Nigerian economy going forward.
Interesting. Thank you so much. Ali, I'm sure you're watching the you're amusing yourself with the Twitter war between Nigeria and Accra and Ghana over whether Twitter headquarters go to Ghana. So suddenly Nigeria, Strive, they could seem to have settled things a little bit. So, well, I'm going to put my data center in Nigeria. I think everybody should be happy now between Lagos and Accra. What's your take?
Well, my take with respect to Strive is, Strive is plugged into OPIC. He has access to American money in a very, very big way. And I think, he's going to, this is a no-brainer. Just as Luke was saying, data is the new oil. This is a no-brainer for Strive. I think he's going to make tremendous returns, and I think there is a huge demand curve ahead of Nigeria when it comes to data. So I think he's connected the dots quite cleverly, and this is the outcome of that situation. I saw all that debate about Twitter going to Ghana, going to Accra. look, we're going to always have winners and losers. I think it's an important message that Twitter's sending that we should be considering, because, these are non-partisan folks. They're looking at making decisions based upon what is in the interests of the company. And sometimes I think they send a very powerful signal, which some of us, should be listening to. And then I've been following the money printing debate, and we had a similar debate here where a number of people in the influencer community were encouraging the central bank to just go crazy and start printing lots of shillings. Look, I think because we're such a young population in Africa, we forget what rampant money printing does. And we're not the Federal Reserve. We don't have the US dollar as our currency, and therefore have a tremendous advantage. We're at a disadvantage. And really, I think, the problem with money printing is you just get into this hyperinflationary environment. And I would argue in Nigeria, if you look at your inflation numbers, this is now blinking amber. And really, if you go down that road, you might as well say, you're going to end up without an naira. You're going to have to look at some other scheme of currency because, you're just going to find it's going to fall out of bed. That would be the straw that broke the camel's back, I think.
Interesting. Thank you, Ali, for weighing in on this. Look, what's the conversation around within the market community on the printing money and inflation news that came out yesterday, and what it means for the market?
So as regards the issue of printing money, I think the CBN has refuted that claim, and there was really nothing like that. And then when you are speaking on inflation, clearly it's been more like a negative for the equity markets right now. You have food inflation around 22%. Headline inflation is already above 18%. So clearly, we're going to see that impact operating cost of a number of companies, especially companies in the REIT sector. So we might see heightened inflationary pressures going forward, and that should definitely impact the bottom line of a number of companies negatively. And more so, given the fact that players in the fixed income space are now a bit worried about what inflation numbers are saying and what they stand to get in the fixed income markets. So for instance, the 1 year yield on Nigerian T-bills is around 9%, and you have headline inflation at around 18%. So that clearly means that you have a negative yield of about 9%. So clearly, the CBN will definitely need to raise rates in that fixed income space in order to attract more investor sentiment in that region. So if that happens, and it's already happening, because months before now, we had 1 year TB rate around 2-3%, now at 9%, and the expectation is that going forward, we are going to see more rate hikes, even as inflation continues to rise. So what that means is that we are moving to a point where we might be seeing, PFAs and other institutional investors diverting funds from the equity market to the fixed income market, just to play safe and also to get more returns on their fixed income investments. And looking at the equity markets, I think we might just be seeing more of bearish trading going forward. However, when companies start to release their Q2 results, when we expect to see significant growth, given the fact that Q2 last year was a really low base because of the impacts of the pandemic, then we might see renewed positive sentiment in the equity markets.
Interesting. Thank you so much, giving a bit of a sense of the market. Let's touch on Southern Africa very quickly, with some of the headline news around the Shoprite finally confirming who's going to buy its local property in Nigeria after deciding to exit the country. Botswana is Stanbic Bank, which is the largest bank on the stock exchange in Gaborone, reporting total income down 5.1%. Zimbabwe may hit telecommunications companies and banks with fines over the FX profiteering. Here we are back to yesterday, Ali, isn't it? But African Bank has a new CEO. Congratulations to Kennedy Bongani. Ali, let's start with Zimbabwe.
Yes, I noticed two things. Firstly, I know that the finance minister is on a roadshow. He was in South Africa recently meeting with fund managers and talking of going to London and New York. So the first point to note with Zimbabwe is they're obviously feeling a great deal more confident about that economy, and all indications are that the weather is going to be optimal and that the farm economy will perform. Look, it's an extraordinary situation. You've got this multi-tier FX system, and they're now accusing the telcos and the banks of FX profiteering. When you have a scenario like you have in Zimbabwe, you're setting yourself up for failure. And I would argue that, as he wanders around the world, I'm sure he's going to hear a lot of people telling him, go for having a unified exchange rate, go for now opening it up and finding and allowing the currency to find its proper level. And I think, if you're really going to normalize the economy, if you're going to sell the Zimbabwe story, you've got to get your foreign exchange situation in order. And I think that's what they've got to do. So I would encourage them to be less punitive and sheriff-like and look at the situation in its totality and try and reorganize it. If I can just touch on South Africa, I was looking through emerging market foreign exchange currencies. The Rand is simply outperforming every other FX currency in that universe you care to mention. It's up about 2.1% this year. If you look at the India rupee is down, the Brazilian real is down, the ruble is down. So it's really worth looking and thinking about that. It's boosted the performance of the stock exchange, which has been doing very well as well. So, you've got the financial markets warming up to South Africa, and I just hope we see follow through from the administration to build on that. And then Shoprite, obviously, we were talking about companies making decisions. It's unfortunate that, so many people were attracted to the Nigerian market because of its size. But it's good to see a local property firm, a local firm taking over the business. I think that's a step up. The local people tend to understand their businesses a lot better sometimes than some of the South Africans, where here as well, they've had a checkered history of coming into the market. Botswana Standard Bank, total income down 5.1%. That's not bad given the fact that, Botswana locked down much more aggressively than most other African countries. And of course, the per capita income there is about 3 times higher than anywhere else on the continent.
Thank you, Ali. Omotayo, will it make any difference to you whether it's called Shoprite or any other name? What's the name?
I don't think it will make any difference. It won't make any difference.
It won't make any difference. So what's your take on this exit and selling local property to a local player in the real estate?
Further to what Harry has said, it's quite unfortunate that a dominant player like Shoprite is exiting Nigerian markets, but then the bright side is that it's a local purchaser, a local firm that is purchasing it. But then it just speaks to the general overview of the Nigerian market, that situations such as our FX, because that's largely what has one of the things or one of the major factors that has led them to leave Nigeria, the FX currency challenges. So that needs to be sorted out and fixed. Otherwise, we might be seeing more exits or even debar new entrants into Nigeria.
Thank you, Omotayo. Look, will it make any difference whether it's called Shoprite or any other name? And is there any potential upsides to this transaction, by the way, of exiting or Shoprite exiting Nigerian investments?
Speaking from an economic point of view, I don't think it will really make any difference in terms of whether it's called Shoprite or any other name. At the end of the day, consumers just want to walk into any supermarket and get whatever they can find, really. But in terms of the implications on the Nigerian economy, what it means that Shoprite itself, a well-known brand in Africa, is leaving Nigeria. It's actually sends negative signals to potential investors that might want to be interested in investing in the country, because you have Shoprite leaving. It won't be the first. We've seen a number of companies live in the Nigerian economy. And even for the new ones, we just even mentioned Twitter war between Nigeria and Ghana, just a few minutes ago. So clearly, the Nigerian government needs to, sit back and actually analyze these things thoroughly. Why are potential investors not showing interest in the Nigerian market? Why are the existing investors, planning to leave? Is it the environment? What do we need to do about the operating landscape? What do we need to do about tax regulations? What do we need to do about security? What do we need to do about power supply and all those things? Then the major issue, like Omotayo rightly mentioned, FX challenges. You don't want to channel your funds into this country. Yes, we have the population as a major positive for investing in Nigeria, but when you look at consumer spend, disposable income, that has been declining over the past 5 years, and it's still declining now because of the heightened inflationary environment we are in. So, you're talking about the population size, but disposable income itself is declining. Then you have the foreign exchange risk. Anytime there is a major shock to oil prices, the next thing we see in Nigeria is currency devaluation. We saw that in 2016. We saw another one in 2020, and it's looking more like we're going to see another one in 2021, given the spread between the parallel market rate and the NAFEX rate. So clearly, investors are worried about all these things. And if the government doesn't do anything about it, we just get to a time where we'll be seeing more companies exiting the Nigerian market for better markets out there in Africa. You can see the way Kenya is growing. Even Angola, that used to have currency issues, it's like they are beginning to trash that problem right now. Ghana is already more like a stable country that is already planning on growing on a sustainable high growth rate. So that's what the government needs to look into to address all these issues around investors leaving the country.
I get your point. There's a whole lot needs to do. Don't cry for me, Argentina. We hope we don't get to that point here in Nigeria. Alice, find it all over. Isn't it?
Yeah, you're right.
According to Madonna, don't cry for me, Argentina.
That was very good.
Interesting.
A very good example to use, friend.
What's North Africa's story? Ali will touch on one or two headlines for us very quickly to wrap up the show this Friday. Carrefour Egypt is planning 400 million Egyptian pounds investments. They're talking about investments. Carrefour, one of the biggest names in Europe, by the way. Afreximbank is continuing to support $3 billion on the table for the PAPSS, which is the payment and settlement system, the pilot program, which is put at the back of the AFCFT. And Tunisia food trade balance, 251.7 million dinars deficit in the first quarter. Ali, give me one touch story to go.
Okay, so let me first start with Carrefour. This Carrefour entity in Africa is the one out of Dubai. It's partnered up with Carrefour France. Seeing what's happened here in Kenya, seeing what's happened in Dubai, this is an incredibly well-run business. It's incredibly successful here in Kenya. It's just cannibalized every other kind of competition and taken over East Africa and continues to grow. And therefore, I'm sure Egypt is a very attractive market for them, and I'm sure they're going to be extremely successful. EGX approving listing of 10 million shares. This is further to what we were discussing yesterday, which is about the self-listing of our stock exchanges. I'm sure that will be an attractive medium-term investment for investors to put away. And then finally, Afreximbank supporting the PAPSS project with $3 billion of funding. They're a very interesting entity, Afreximbank, and have got a huge role to play over the next decade as we roll out the African Free Trade Agreement and implement it. And the only fly in the ointment is the exposure to Zimbabwe. But other than that, I would say that they've played a singularly good role in facilitating the Pan-African market, and this is part of that strategy.
Interesting. Thank you so much, Ali Kansachu, CEO and founder at Rich Frontiers Management in Nairobi. Omotayo from Greenwich Merchant Bank Limited in Lagos, Nigeria, and Luko Fojebe, Head of Equity Research at Vertiba Capital. Thank you, the three of you, for being on the show this morning. Have a great weekend and see you back on Monday. Bye for now.